Did you make money in real estate this past month? Did interest rates go up? Was anybody actually looking to purchase? What happened in real estate? Well, let's find out. I am Justin Miller with the Chung Miller Group. At the Chung Miller Group, we help people buy and sell homes. We help people build wealth through real estate, largely based on having better information that empowers you to make better decisions with regard to buying or selling, with regard to investing, or actually taking ownership of a primary residence or a vacation home. So every month I do these market update videos for you to let you know what's going on in the housing market around the Las Vegas Valley. I do two different versions of this. One is the single family market update, which is this. The other is the market update for condos and townhomes. I publish the single market update on about the 8th of every month with data taken, aggregated on the 7th of each month. And I publish the condo and townhome video on about the 15th of each month, again with data captured on the 7th. Okay, so let's go ahead and dive into the information, and then I'll have a few comments as we go through here, things that are actually driving the market right now. We're not yet, but we're approaching the halfway point on the year. So this is the May 2024 real estate market update for single family resale homes in the Las Vegas Valley. We're going to do a comparison then from what took place in April, looking back how things changed month over month from March to April of 2024, and how things changed annually from April of 2023 to April of 2024. First piece of information we look at, pricing. What happened with pricing? Well, we ended April of 2024 with a median home price, single family resale, here in the Las Vegas Valley of $462,500. Now that's interesting. It's up not a whole lot, but 0.5% from $460,000, which we ended March. It's up 8.8% year over year. So the end of April of 2023 through the end of April 2024, we are now only $17,750 below the peak price that we had seen in the Valley in May of 2022. We had actually gotten from the 480 peak, we had fallen all the way to $415,000. We've gained almost $50,000 on that, and we're closing in on that prior peak. Okay, so up 8.8% year over year. Now, I do want to point out, of course, I look at pricing in a second way as well, because I want to see what's going on with regard to the different segments of the marketplace, the upper end, the lower end, and how they're comparing. And so we look at price per square foot to determine that. Median sold price per foot at the end of April was $255 per foot. That's up 1.6% from the $251 per foot that we saw at the end of March. It's also up 8.1% from the $236 per foot that we saw at the end of April last year. Now, by comparison, we went up 0.5% on the median sale price, 1.6% on price per foot. That suggests actually the upper end of the market started performing better in April 2024 than what we had been seeing earlier in this year. And in fact, that's confirmed with we're up 8.1% on price per foot, but we're up 8.8% annually on median sale price. So you'll remember of the previous several videos, I'd mentioned the upper end of the market was struggling relative to the lower end of the market. And so what we're seeing now is that's changing, and we're starting to see the upper end of the market come back as well. It's not the lower end is struggling now, but rather we're starting to see a coalescing around similar growth rates, similar sales patterns in all price strata for the real estate market here in Las Vegas. And so that's actually really good news. We would conceptually think that the lower end had been having a harder time with very high interest rates, but actually it was the upper end of the market that was struggling more so with these high interest rates. And so as the upper end, if you will, takes on less price sensitivity around some of these interest rate issues, that's actually really good news for us in terms of the market here. Okay, so that's what's going on with price. Now let's dive into market internals, demand and supply. And we always look at demand first. And remember, demand is measured based on number of houses that actually sold, they closed escrow, as well as number of houses that went into contract, became pending sales. So let's look at sold first. 2,110 single-family homes sold in April 2024 here in the Las Vegas Valley, resale single-family homes. That number is up 17.4%, a very strong increase from the 1,798 single-family homes that sold in March. That's a great gain. It still actually takes us to numbers that look kind of like where normal Decembers are in the Valley. So sales are still weak, but we had a really great increase, actually above normal seasonal increase from March through April of 2024. So that's really good news. And year over year, we're up 18.7% from 1,778 sold in April of 2023. Now, not only is this good news in terms of the numbers and the growth rates that we're seeing there, but remember, this is taking place in the face of really high interest rates. And so let me comment about interest rates real quickly before continuing on to the other demand number. Interest rates had started April at just about 7.0%, and throughout the month, interest rates increased and ended April, according to the Mortgage Bankers Association, at 7.29% on 30-year fixed rate mortgage loans. That's really getting into the high category for mortgage interest rates. And so these sales took place against the backdrop of high and increasing mortgage interest rates. Similarly, the other demand measure took place in that same interest rate market, and so that's pending home sales. Pending home sales, contracts written during the course of the month, 2,244. That's up 5.9% from the 2,119. So that's excellent news with regard to increased pendings, and also that pending number, 2244, is higher than the 2110 that we saw for sold, which suggests that May's closed volume will actually exceed what we saw with April's closed volume. So that's a forward-looking indicator on demand, because closings typically take place a month subsequent to writing of a contract. So great news. We're also up 10.9% from the 2023 pending contracts that were written in April of 2023. Now, before I get to supply, one other thing I want to point out, and that is there have been a lot of people talking in the press, a lot of people talking in social media, the influencers and commentariat, as I refer to them as, talking about how prices are collapsing, prices have been collapsing, prices are going to, just kill off people who want to buy into real estate, and you should wait for all of the foreclosures because they're here and they're coming. And the market is actually incredibly weak. So the past several months, we've looked at foreclosure information, number of foreclosure sales that have taken place in the Valley. And those had gone up to 16, and they'd been at 13 and 12. Well, last month, March of 2024, there had been 13 foreclosure sales in the Valley. What happened in April? There were 7. 7 foreclosed properties sold in Las Vegas in April of 2024. Everyone who's out there talking about foreclosures, they're literally just making stuff up. It's not happening. It's not going to be happening. Now, if you want to look at commercial real estate, different issue, different video. There are some problems in the commercial real estate space, at least portions of commercial real estate. In residential real estate, we're not seeing it. If you want to look in Miami, you want to look in certain other localities, yes, there are other issues beyond simply prices and interest rates that are impacting numbers of sales and impacting what's taking place in those markets. Here in the Las Vegas Valley, where we concentrate, we don't have we could actually say, it's not a nice thing to say, but we could actually say we have a foreclosure problem in the sense of we have almost no foreclosures, right? Foreclosures usually add some number of sales into the overall market space. It's not nice that they happen, but they happen in a normal environment. Well, they're happening with like 0 frequency in the current environment. 7 in April, after 13 in March, and 12 the month prior to that in February. We're just not seeing foreclosures. If you're waiting for foreclosures, hang it up, go somewhere else. They're not happening here. You'll just end up never buying a home. Okay, so great news on the demand side. Sales went up significantly, pendings went up quite a bit, and the pending numbers continue to exceed the sale numbers, indicating future growth. So very good demand indicators in the single-family resale market space here in Las Vegas. But of course, that's only one half of the equation. The other half is the supply side. So what's going on with supply? Well, supply, we look at with both number of listed houses, the number of houses sitting in inventory that are for sale, and the number of newly listed houses that come into inventory. So first, for sale inventory. These are houses that are sitting there waiting for offers, waiting for contracts to be written. 3,577 at the end of April 2024. This number is down. This number is down 6.6% from the 3,828 that were sitting waiting for offers at the end of March. This number should be going up. We should be at our annual low for inventory in December. Well, we've been going down on inventory for 16 of the past 19 months. We're sitting at incredibly low inventory right now, literally a third of what would be normal inventory here in the Las Vegas Valley. Now, this is not a new phenomenon, right? This has been going on since the middle of 2022, when we had achieved something about 2/3, 3/4 of what would be normal inventory. Not tight, but normal inventory in the market. And we've just come plummeting down from that level. We're down 30.6% on inventory levels from 1 year ago, 5,152 in April of 2023. With the exception of 3 months in 2022, this is the lowest inventory that we've ever had here in the Valley since August 2007. Now, some of you may be thinking, wait, Justin, you said something just like that last month, that we had only 2 months of lower inventory than we had in March of 2024. We went down on inventory another 6.6%, but now we've got 3 months that have been lower, going all the way back to 2007. What gives? This is why I always pull the data on the 7th of the month, is because the entire data set is subject to ongoing revision. And the earlier in the month that we draw the data from the data set, the greater the number of data elements that are still needing to be revised from the prior month. So a pending sale that actually closed, or a pending sale that fell out and the house went back into the market. Listing that somehow was recorded as coming soon, but not as an active, that actually was an active listing. It was just misrecorded. So the data get cleaned, the data get updated as we go throughout the month. Sometimes revisions can happen months later, but those are very small numbers. The data is mostly accurate as of the 7th of each month, but we can still get these swings in the data that cause these apparent statistical anomalies. They're not actually anomalies, they're data cleanup problems that creep in and create a challenge for us on these comparisons. So in reality, the numbers that were reported at the end of March were the accurate numbers as of the end of March per what had been reported into the multiple listing service. Those numbers have subsequently been updated such that what was reported in March is no longer the best indicator of what the data look like as we are here on the 7th of May. So we have the most accurate indications of the information for the month of April, and we're comparing those to the most accurate indications of the data for the month of March of this year as of what's in the data set on May 7th. So knowing that the data set evolves over time means I want the stability of always looking at the data on the same date every month when I've got the approximately same type of data challenges going forward each month and approximately the same level of data certainty for the earlier month all the time. But again, we still end up with these artifacts of changed, updated, cleaned information in the data set. So I want to point that out to you here because it's really apparent, because the March update said there'd only been 2 months lower, going all the way back to July of 2007. Now I'm saying there's actually 3 months lower going back to the same month, July of 2007, even though we've fallen on inventory by 6.6%. So that's what's going on. Okay. Now, the other way in which we look at supply is newly listed resale houses. So these are single-family homes that an owner decided during the course of the month that we're looking at, so the data for April of 2024. During April of 2024, owners decided, I'm not listed yet, but I want to list my home. I want to go ahead and sell it. And so they came into the marketplace. And so I categorize these separately just because it's an interesting element that tells us how the market's evolving. And it feeds into the inventory that we see in inventory, so in the for sale numbers. So we know total inventory fell by 6.6%. New listings, they grew during April. They should be growing January through June. Every year they should be growing at strong rates. But just like we've seen inventory coming down counter seasonally, we're seeing growth in new listings anemically. So we're up 2.8% at 2722 new listings relative to 2648 in March. This is way below normal seasonal gains. We're up 15.5% from the newly listed 2357 that we saw in April of 2023. But this remains not just surprisingly low for spring. These new into markets were so weak that they still allowed overall inventory to fall by another 6.6%. We've got a really big inventory problem in this market. We need new houses. We're going to see it in townhomes and condos as well when we get to that in the condo and townhome update next week. We've got a really significant inventory problem. What's causing that? Well, it's a good question. A lot of things feed into it. One is high interest rates, because more than 3/4 of the people who sell a home are looking to buy another home. And so as interest rates are high on that replacement house, a lot of sellers figure, well, I'll just stay where I am. And they'll effectively be locked into their existing home because of high interest rates. It's very unfortunate. Absolutely a feature in this marketplace. Why else? Well, high interest rates that are causing builders not to be able to build because it's too expensive to build. And so that's keeping the overall inventory of houses lower, making it much more difficult to transact in this marketplace. What else? Well, there's certain categories of owners who probably have decided they'll never sell, right? Categories that are different than simply the single family house holder who is making a decision based on interest rates. So we've actually had some structural changes in the marketplace, which are probably going to be permanently holding inventory low. Note that if you're a buyer, because it means that you're probably always going to be suffering under unusually low inventory compared to historical norms. And right now, very significantly low inventory. Okay, so one other thing I want to talk about, a data point I've been looking at for the past 4.5 years, and that is back on market. These are pending contracts that fail. Seller and buyer got into an agreement on a particular house, wrote a contract, and instead of that contract migrating through the various steps to the end and having the buyer actually take possession and ownership of the home and the seller go off and do whatever the seller was wanting to do with the sale of that house, the contract falls apart, property may go back on market, the escrow has failed. These numbers have been historically elevated actually since we came out of the pandemic shutdowns in the middle of 2020. Obviously they were high for pandemic shutdown reasons in the earlier part of 2020, but these numbers have remained historically high, fluctuating between 25 and 33% of the market. Normal back on market numbers 10 to 12%. Well, 782 contracts collapsed and the property went back into the market during the course of April. This is 27.0% of contracts failed, well over twice normal. As I've said in the past several videos, find out why this is going on. Talk to me, talk to your agent. If you don't want to hire me, you want to hire someone else, find out what they're telling you about these historically high back on market numbers, because they're hugely problematic. They are disrupting the market in very negative ways. Whether you're a buyer or a seller, a failed contract is a bad thing. You want to make sure that your agent understands it. Your agent can explain it to you. Your agent can help you figure out how to navigate these contract failures so that you don't get negatively impacted by the things that are controllable. Okay, so that's it for this month. I will see you in the multifamily market update, that's condos and townhomes. I will see you in other videos as we go through time. And please feel free to reach out, ask questions, make comments. I look forward to talking with you and helping you in your real estate adventures. I am Justin Miller with the Chung Miller Group. Thank you.